I'm Aarati Krishnan and you're watching A to Z of stock market investing. Today let's look at X for ex-dividend or ex-bonus dates. If you were an owner of Infosys shares and didn't know much about the market, the stock's price behavior on June 15 would have really shocked you. When the stock opened for trading on that day, it actually opened at 980 rupees. On the previous day, it had closed at 1976 rupees. So did investors in the Infosys stock really make a 50% plus loss? Not really. The stock had just gone ex-bonus on that date. Basically, on April 24th, Infosys had declared a 1:1 bonus for all its shareholders. This meant that all the shareholders in Infosys would get one free share for every share that they already held. When it made this announcement, it also declared that June 15th would be the ex-bonus date and that June 17th would be the record date for this announcement. So when the shares actually went ex-bonus, because of the new free shares that would come into the market on that particular day, the share had dropped very sharply. Because in the stock markets, the shares are constantly changing hands. As we know, any listed company has its shares always available in the market for some people to buy it and for others to sell it. So how would an investor in a stock know whether he is eligible for any bonus, dividend or other goodies declared by the company? It is for this purpose that companies declare an X date. So when a company makes a bonus announcement, by declaring an X date for this particular announcement, it is telling investors that this is the cutoff date before which you should buy the share so that you are eligible for this bonus which is being given. Investors who bought the Infosys stock before June 15th would have been eligible to get that one free share that the Infosys company had offered. Investors who bought the share after June 15th would not be eligible to get the bonus shares. Not really. The stock only adjusted for the additional equity capital that the company has actually raised. Because the company has declared a bonus offer, its entire equity base would now double. This means that its earnings per share actually has to halve and its PE has to remain the same. Therefore, theoretically, a stock which has declared a 1:1 bonus, when it goes ex-bonus, it has to fall by exactly 50%. This is what Infosys did. It didn't become any cheaper or costlier when it actually went ex-bonus. It is not just for bonuses and dividends that companies declare X dates, it is also for other corporate actions. For example, if two companies have decided to merge, the date of the merger is very important for investors to know. Therefore, there will be an X date announced for that date of the merger also. Investors who buy the stock before the X date will actually be eligible to receive shares in the combined entity. Those who buy shares after the X date will not be so eligible. X dates are even more important for demerger situations where a company is spinning off a profitable division. Therefore, if you buy the stock before the X date for the demerger, you will get the entire company. But if you buy it after the X date, basically you will get only a part of the company which remains in the original parent. Well, the record date is usually set 2 business days after the X date in these corporate actions. It is actually the date on which the company verifies its books in order to find out which shareholders will be eligible for this particular bonus issue or dividend offer. Normally no, because when stock prices actually adjust to the bonus or dividend offers, they are supposed to fall exactly to the extent of the goodies that have been declared to older investors. But sometimes you can get lucky and make a small gain when a stock price settles above its theoretical price. So many traders do end up taking positions before these X dates in the hope of making a quick gain when the stock goes X. For example, if the Infosys stock had settled at 1000 rupees instead of 980 rupees just after it went ex-bonus, then traders could have made a 20 rupee gain on the stock after it went ex-bonus. Talking about exes can be a very painful subject if you've recently broken up with your girlfriend or boyfriend. But nevertheless, it's very important as stock market investors to know the significance of ex dates.